Good evening and welcome to The Square. Tonight is a very informative discussion that we're going to focus on, looking at the growth of the Rwandan stock market since its official launch in 2011. So looking at milestones in the last 10 years, we're also going to look at MTN Rwanda's recent listing just at the beginning of this month on the Rwanda Stock Exchange, what this means for the company's operations, as well as what it means for its shareholders. We'll also touch on platforms that are built, that have been created to promote investor readiness amongst small and medium enterprises. And joining us, I'm very happy to welcome to The Square for the first time, Mr. Pierre Celestin Rwabukumba, who is the CEO of the Rwanda Stock Exchange. Pierre Celestin, great to have you on The Square.
Thank you.
Also joining us, I think for the third time, a real pleasure, is Mitwa Kayamba-Ngambi, who is the CEO of MTN Rwanda, looking very lovely in yellow. Mitwa, great to have you on the show.
Thank you so much, Diana. Glad to be here.
Great. My name is Dana Mpisi, host of The Square. As always, I'm joined by The Square resident panelists. I'll start with you, Charles Haber. Great to have you as always on the show.
Pleasure, Diana. I'm so happy that I'm matching with Berna.
And Berna, great to have you on this show as well. Berna Namata, always a pleasure.
Thank you. Adorium.
And we're just going to quickly dive into the topic because I think there's a lot of meat and we have a limited amount of time. And the first question really goes to you, Celestin, Mr. Rwabukumba, on the Rwanda stock market, just to give us an overview. So we know the capital market was created for 3 reasons, and if I can just read this out for the purposes of informing our audience. One, to provide a platform for long-term capital mobilization for the economy, both for government and private sector. Two, to promote a savings culture amongst Rwandans and act as a reference of fostering good corporate governance and accountability amongst businesses. So since the official launch of the Rwanda Stock Exchange, if you could share with us some key milestones over this 10-year period. Over to you, Celestin.
Thank you very much. I think first things first, why the market was created was to help raise long-term funding for the economy, for the private sector and government. So the first milestone was to get the first product on the market, which is the companies listed. We've been listing companies over the years, and a few corporate bonds and many government bonds on the market. So far we have 10 companies listed on the market. 5 of them are from Rwanda, and 5 of them are from the region, except one. Actually, there are 4 from the region and 1 from the South Africa, the Johannesburg Stock Exchange in healthcare industry. So the first milestone was to get products on the market to serve the purpose of raising long-term finance for the economy. So far, the market has been able to raise around 1.15 trillion Rwanda francs, or $1.15 billion. So, and also if you combine with what has been traded in the secondary market, we have been able to do altogether transaction value of $1.5 billion at least in the market. So that's the first milestone, the product. The second one is to get people on board to be able to save through the market, the same platform. So far today we have about slightly over 50,000 active accounts in the market from different investors who are investing in our market. So the third one, we've been able to mobilize many companies, small and medium enterprises, all together to be able to foster good corporate governance within their organizations. The other thing is we have been able to link to our regional counterparts, and we are part now of the bigger capital market fraternity here in the region and beyond by linking and working with our counterparts across the globe. So those are, I think, a few of the milestones we have reached, and many more to come.
Thank you very much, Celestin. When we were putting together this show, one of the things I was thinking of is, just the public sensitization when it comes to the stock markets, just demystifying all this jargon. Many people think you have to be a rich investor or company? How does someone join the board, the stock exchange, so to speak? So with regards to public sensitization, just explaining this concept to Rwandans, as well as encouraging other domestic companies to get them onto the stock exchange. What are some of the challenges you faced, and how do you think these can be overcome, so to speak?
Well, being a new market, it's only 10 years now we are celebrating. It's been very difficult because of the nature of our population, the financial culture is non-existent, quasi-non-existent. And telling people to save money, they don't have enough of it already. It's a challenge. People would rather, tell you we want to buy land or something, or we don't have enough money and things like that. But that financial culture has not been there so far. There is also natural resistance to anything new. There is also lack of the general knowledge about that. But we have been campaigning time and time for people to be able to join the market. But, because of what they see all the time, being the word of mouth and experience from people who have done it before, who have made money from the market, and the publicity across the markets, and more companies they are associated with. Their banks, now the telco has come on board. A few companies which are of good brands in this country have been able to join the market. It has helped a great deal. But the challenges remain. We also have the issue of buying, and the general resistance actually from the companies. That's the company's side. Entrepreneurs out there who are afraid to open up sometimes because most people don't want to disclose. Culturally, no, it's not only associated to Rwanda, it's many countries, especially developing world, people don't want to disclose much of their businesses, and the fear of being taken over by other people. And that always, I call it a fallacy, because it's not the case. If you want to list your company, for example, you are not listing the entire company. No, sorry, you listed the entire company, but the only shares that can be floated to the market for people to be able to buy, you determine how much percentage people can be able to buy into your company. So if you have a company like Brarirwa, it's only 25% that can be traded and bought by people. MTN, 20%. So the 80% remains with the original investors who are in MTN, but the general public can only buy and sell the 25%. So some of those, the knowledge around that becomes a problem, but it's a matter of, of educating the general public and the people, because the benefits are many, and those who have done it, those who have been able to save some and have seen the benefits on both sides are helping to spread the word across.
Thank you very much, Celesta. We'll come back definitely to SMEs and how, I know your company, your institution is trying to onboard them to join the stock exchange in terms of, investor readiness through the investor clinic. But just before we also go to Mita, I'd like to hear from the Square Resident panelists if they have any comments based on what you've just said. Celesta, Brenna, I'll kick off with you.
As you were speaking, I was thinking about one of the news items this week was pyramid schemes. RIMP has kind of stepped up pressure to raise awareness, and they're investigating several companies, registered companies, which are operating as pyramid schemes or Ponzi schemes. Now, you wonder why it would be easy for pyramid schemes to recruit customers, and credible institutions like the Rwanda Stock Exchange are unable to get ordinary Rwandans to put their trust and invest in tangible, on the market. And maybe it would be great to hear what Celeste has to say on that. So, if you look at the progress that we have made, I think we've come a long way, and well done, Celeste and team, because they've been really from 0 to now 10. That is so much progress. But again, if you look at the financing needs of the country, there's still much more needs to be done. And why am I saying this? the financing requirements currently, most of the private sector still looks at banks as their first option, and not because the banks provide affordable capital. So why do we still find that the private sector finds it easy to get expensive loans from commercial banks and not, for instance, issue an IPO and raise money from the market? That's a big challenge, and I don't know how that will be addressed. Again, if we look at the listings we have had recently, personally, I feel that yes, it is good. Confidence in the economy, because throughout the pandemic, if you are able to attract some listings, again, that is a but again, in terms of market, of the returns, on the market, for me, I feel that we could do more with IPOs. And the benefits of IPOs is that, first of all, the whole process, you have many players involved. You stand more to benefit, and I feel that our market, as young as it is, benefit more from IPOs, for instance. Secondly, we see that if you look at the trend, I think the market has mainly supported government. And why do I say this? The government has successfully issued several bonds, part of also to support the growth of the capital markets. And for some reason, of course, they are always oversubscribed, but every time you see a government bond, that means our risk-averse banks will rush to invest in treasury, bonds, as opposed to lending to you and me, who is more risky. So I don't know what Celeste could say about that.
Celeste, do you want to quickly weigh in on what Brenna has just, some of the issues she's just raised?
Yes, I must say that the issue of people going to those schemes, for example, of, which are illegal most of the time, they are looking for a quick buck. People want to make money quickly, and they want to make a lot of money. So a lot of people watch a New York Stock Exchange, they look at Bitcoins and all those things. Anything that comes promising high returns, they want to do it. But there is no get-rich-quick scheme out here. So when you are talking about market, the capital market, you are talking about stable, reliable companies and businesses which have gone through the test of time and which have good corporate governance, which have good accountability systems in place, and they are profitable. If I may say, all the companies on the market here are profitable. If you buy government bonds or any other bonds which are on the market, they are all have good returns for anyone who invests in them. But people get impatient, so people like to see money they can make the turnaround quickly. But that's not what the market is looking for, because it's not easy for them, and they like the easiest thing to do. So they don't want to wait for a long time. But as to why and how, the question of maybe government raising money through the market, and it may crowd out the private sector lending. I don't think so far we have seen any issue like that, because the banks here are very liquid. All of banks say they are liquid. And the bankable projects, actually part of the capital market also of us having problems also, is to have good, credible companies, good, credible businesses which are bankable enough. So, and it takes time to prepare, to get ready for investments. So that one is also a big cause. I don't think there's any fear so far of government crowding out those the banks or the private sector lending or borrowing. The issue is that some of the businesses are not ready, mainly. So I think it's not a big problem.
Charles, do you want to weigh in?
Yeah, I never want to be in Celeste's shoes, not only because he's my personal friend. We socialize and play tennis together, but when he refers to a market, it's a very sophisticated phrase. He's referring to the stock market. But we need to realize that the money markets have other competitors, and notable amongst these competitors are the Ponzi schemes and the pyramid schemes that Bana was talking about earlier on, and that are a genuine competition. But there's also government itself and the banks themselves who would probably prefer to, as Bana was saying earlier on, to invest their money elsewhere or raise capital, because when you float your shares, I think back at the risk of repeating what Celestine was saying, there's two reasons why you list. It's one, to be able to mobilize capital, but the other reason to also be able to offer other shareholders a stake into your business. So the competition is high, not only amongst the people who are trading with you, but also amongst the options that those people trading with you have. So I'll give you a practical example. One of the biggest competitors of commercial banks is money lenders. And it's difficult for Celestine to get money lenders who get a 30% interest rate on their money, on their money they've lent out, to invest onto the stock exchange. So if you look at the comparables in terms of who is competing for the little money that we have as an economy, it's a very tough space to be in. And then, so I think that's what is to the point of I don't want to be in Celeste's shoes. But I want to say something else really around communication and awareness. Now, if you're to go from Celeste to Mitwa to Bana to Diana to myself, we probably belong to one investment group or another, or we've done one thing in a small group or another, or we've done one thing individually, or we are shareholders in one company or another. Now, I'm not going to put all the 5 of us on a cross and say, in those groupings, how many of them have invested in the stock exchange, because we might get embarrassed, especially if we zero onto the Rwandan stock exchange and the different products, the different companies that are there, and it will sort of boil down to the advantages or probably the communication that either whether it's a capital markets authority or Rwanda Stock Exchange. I'm not sure who is playing in that space around communication, but the volume of cash. The last time we had Mitchell on this show, we were talking about cashless. But the volume of cash that is in this economy, if a decent percentage of that could filter into Celeste and the Rwanda Stock Exchange, I think that would make a very big difference.
Yeah.
Yes.
But like Celeste said earlier on, the financial culture is just very lacking. The just understanding of it. So definitely, I think
a huge amount needs to be invested into the awareness.
Awareness. He's operating.
I think, but it's also incentives.
Incentives.
Yes, it's also incentives because what typically the capital markets is to reward savings. If you have, so the return, and I think he'll probably speak to it. They are busy trying to build a yield curve. So if the yield curve as is today perhaps is not yet as an attractive investment as it should be. So probably in the next couple of years we'll see, once we see the improvements in the yield curve, then we'll see more investment.
Yeah. I just want us to, Celeste, definitely we're going to come back to you at one point of the show regarding, what Charles and Brenna have been saying, public awareness, what Brenna just talked about in terms of incentives, the yield curve that, is it's projected to grow. I just want us to now move to MTN Rwanda's Cell PLC, MTN Rwanda. Mitwa, as all of us know, I think it was exciting times. First telco to list on the Rwanda Stock Exchange, 10th company on the 4th of May. Just over 1.3 billion ordinary shares were registered with the Rwanda Stock Exchange at an initial listing price of 269 francs per ordinary share. So with the listing, to our viewers, 20% of MTN Rwanda's shares, which were previously held by Crystal Telecom, are now directly held by the public. Some my question to you is, what prospects, does this listing have for MTN Rwanda Cell PLC operations, as well as prospects for your shareholders who are now directly in ownership of the shares?
Well, thanks, Dan, and it's a really interesting conversation we're having today. And I think MTN Rwanda Cell, similar to the RSC, has had a very long journey within Rwanda. We talk a lot about how MTN has been in Rwanda for the last 23 years, and we talk less about how actually Rwanda plays quite a very pivotal role in the story of MTN Group as a whole. One of the things that people don't know is that, coming out of South Africa, the first investment for MTN Group was out here in Rwanda before they went anywhere else. So this is the reason why you'd see MTN playing a very active role in various facets of the economy, trying to, find a place to lend itself to economic progress as well. And hence, our thoughts around the capital market space, an area where we traditionally haven't played a very active role. Like you mentioned just now, we were listed indirectly, 20% of the company was listed indirectly through a special purpose vehicle, CTL. And all we've done in this transaction is remove that middleman of sorts, allowing the shareholders who were previously shareholders of CTL to now own direct shares within MTN Rwanda. What this does, though, which is the exciting piece, is that shareholders who typically wouldn't have engagements with MTN Rwanda directly now have that access. So they can get a bit more understanding on the performance of the business, but even more so, outside of the performance, can understand strategically where the company is going. And things like that are typically the things that lend themselves to investment decisions for shareholders. So for shareholders, really great visibility around, what is the company about, what has it been about, and where is it going? I think on top of that, you talked about incentives, Berna, and the great thing about having a direct shareholding as we have now, it removes, for instance, double taxation that was there before. When dividends were paid out, shareholders were paid out through CTL, taxed once at the point of payment between us and CTL, and then therefore another layer when they're being paid individually on the other side. So those kind of bottlenecks that were there before, having that middleman in place, have now been removed. So really great prospects from a shareholder perspective. And you talked a lot about visibility as well, and I think we all have quite an active role to play. Like Charles mentioned, it's not only RSC or the ministries or the people who are on the stock exchange. It's all of us together. And I think the listing on the stock exchange creates a lot more visibility, not only for MTN, to be honest, but even for the entire stock market as well.
Thank you very much, Mitwa. So some of the questions, I know when this happened with Simrawa, there was a bit of hullabaloo on social media. So when MTN was listed, it was listed in terms of listing through introduction, as opposed to doing so via an initial public offer. If you could just share with us why this was the case, and then also we know there was a waiver to have the requirement of 25% shares to just 20%. If you could just shed some light on that, because these are some of the questions I think the public would like to hear you speaking on.
Yes, sure. So MTN Rwanda, like I said, was in a very unique position where it was actually already listed on the stock exchange. At least 20% of it was via CTL. So an initial public offering beyond that initial 20% would be seen maybe as a future step, but initially we already had public shareholders through this 20% shareholding through CTL. So the initial first step, the natural first step, would be an unbundling of this CTL structure to allow that direct shareholding. And one of the points that Celestine raised earlier as to the objectives of establishing the stock exchange was the raising of long-term capital. At the moment, or at least initially, MTN Rwanda didn't have that specific need to raise capital, but the beauty about listing now directly is that it creates that platform for the future. If and when that capital requirement does become available, if the demand is there in the market, then of course, from a shareholder perspective, there'll be application of minds to see, do we go beyond the 20% that was initially floated.
Mm-hmm. And I have just one more question before Charles and Brenna, and I just wanted to know, you introduced the new fintech subsidiary of MTN, Mobile Money Limited, and just to understand for these 20% shareholders, what does this mean for them? I mean, mobile money, just even the name says it itself. It makes a lot of money.
Right.
I think it's one of the biggest assets MTN has in terms of operations and revenues. So if I was a shareholder of MTN, one of the 20% shares. Does this new company, what does this mean, for instance? I don't know if you can speak on it now, maybe it's too early, but if you could just shed some light on the implications this has for current shareholders of MTN Rwanda PLC.
No, I definitely can, and it's a very important question, given also the timing of events. The whole essence of us establishing mobile money as a subsidiary company was really to grasp the growth opportunity that we see in that mobile money space, allowing the company to be a lot more agile, quick to turn around innovation, and also create some very clear lines as far as governance is concerned, given that the regulatory body for mobile money institutions remains the central bank. So heightened governance and structure around that mobile money company was one of the main incentives for us to do so. Having said that, you'd know that when we announced the establishment of the company, we established it as a fully owned 100% subsidiary of MTN Rwanda, implying that if MTN Rwanda is listed and you have a 100% owned subsidiary, shareholders of MTN Rwanda naturally also have the shareholding within the mobile money company. So that doesn't affect our shareholders in any way.
Okay. Exciting times ahead. Berna, would you like to weigh in on this? I know when we had a conversation some time back, when MTN listed the beginning of this week, you had some comments on it, but I feel like I hope Mito has answered some of your concerns that you raised 2 or 3 weeks ago. I remember when they listed on the 4th of May. Is there anything you'd like to share?
No.
Okay.
Yeah.
I think your concerns have been sufficiently answered.
No, not really. Not really.
Okay.
It's just that I'm on a different platform. This is RBA, so there are questions I may not be able to raise because it's an RBA platform.
What does that mean?
Yeah, no, I'm being honest. I'm being honest. We can have this discussion off the air. But the thing is, going back, I like that she was honest. MTN didn't have to do the listing that they did because ideally most companies are targeting capital and in some markets cheap capital. Yeah. Secondly is visibility when they list. There's a lot of media coverage and the brand gets a lot of visibility. Now both MTN has, so for them to list, it's more than visibility, it's more than capital. And I think it reaffirms again the investor confidence in the economy. And on the other hand, I think the regulatory framework, what is happening to MTN, I think we saw it happen in the Kenyan market with Safaricom, M-Pesa. M-Pesa has also done the same. But for me, the concern is going forward. One, we are seeing that even with these transitions, for instance, transaction fees are still a big problem. Volumes have gone up, but fees are not going down. So why not? And perhaps that's an issue I would like
You'd like to put forward to her. Amita, would you like to answer that?
Yeah, sure. And I'm guessing Brenda is referring to mobile money transaction fees, I'm guessing.
Yes.
And I think we'll need to look at the discussion around transaction fees in a holistic manner because at the end of the day, for us, our biggest intention is to drive financial inclusion, right? This is why we established mobile money as a function in the first place. This is why we are, investing into establishing it as a separate company, just to make sure that we are all running along the same race in terms of driving the cashless agenda. However, when you look at the mobile money ecosystem in its entirety, you see there's a great part, in fact, if not the majority of the transactions that still remain absolutely free, And I know there's been a very topical discussion around bank push-pull fees, which is very relevant. At the end of the day, when your customers raise concern around fees, it's a concern that is raised that may be valid and that needs to be looked into. But when you look at the entire ecosystem in its entirety, MomoPay, for example, which forms a great part of our transaction volumes today, and I'm sure, Bena, you agree, when you walk around Kigali, when you walk around any parts of the country, you're able to pay very freely with MomoPay, and that is not a service that is currently charged. So I think the transaction fee discussion would have to be a holistic one. I'm sure it's also being led by the central bank, but at the end of the day, my assurance would be that, for us as MTN, as we've been in the past and as we are today, the whole intention is to drive financial inclusion. So if there are discussions around, how can we make it more accessible, more affordable, beyond what it is that we've done today in the MomoPay space as an example, of course, these are discussions that would continue with the regulatory bodies.
So just to clarify, so would the issue then be Infrastructure or volume? Because if you're getting the volumes, why wouldn't that affect the fees, lower the fees? Or is it that the cost of investment has been so high that you don't feel the volumes are enough to sufficiently reduce the fees?
No, definitely. I mean, there are quite a number of facets to cost, right? So it's not only the investment or the infrastructure-related costs that exist. Today, you know, when you drive around the streets, for instance, you'd see over 40,000 people who are wearing these yellow jackets who serve mobile money customers every day. So the fees that we inevitably charge also go to servicing and serving some of those people who are walking around the streets, servicing customers on withdrawals, on deposits, and things like that. So what I meant around the need to look at this discussion holistically is that right now we're focusing a bit more on bank push-pull fees without necessarily looking into the other areas of transactions whose volumes have also grown, which currently remain free. And at the end of the day, yes, while overall transaction volumes may have grown, economies of scale, even from a pricing perspective, also come into play. So investment fees are definitely one, investment costs are definitely one, infrastructure, support, maintenance, but more importantly, one aspect that we cannot ignore is the 40,000 people who are on the street today who are serving, as opposed to having a physical branch, who also get a cut in terms of the transaction fees that we charge today.
Yeah. Like you said, Mito, I think, yeah, there's an element of looking at it holistically. But Brenna, I think that, you know, that's more or less...
It would be good to have a banker and then ask her, because I think it's... when she says on the other side there are also volumes increasing, then it's the banks that also should be coming in and...
Yeah, but I think holistically, yeah, but also holistically, it makes sense in terms of looking at the different actors involved in, if you're going to reduce the rates, how does this affect all these different building blocks that come into Momo Pay? Anyway.
I mean, it's corporates, so they want to create more value for shareholders, so one can understand the rates.
I'd like to hear from Charles.
Yeah, I just want to take from the last statement that Bana has made around more value for shareholders and link it to the 1.5 billion that Celeste raised in terms of the size, the volume of transactions. And I think that's where the gist of the matter is. You want to see a very vibrant stock exchange, and it is the responsibility of especially this Rwanda Stock Exchange, but also everyone else who has floated their 20%, their 25%, to make sure that you have a huge subscription and you're driving traffic towards that. So if MTN is going to strip its most visible, its most purportedly profitable line, which is mobile money, in again, purportedly visible, I'm using those words, Mitwa, without looking at your financials,
right,
to understand which one is bringing more money. But I'm saying purportedly and visibly because everyone uses mobile money, but not everybody uses data.
Right.
Then we would ask ourselves questions. But even though you explained it that very well, it's not that obvious to the common man, and brings us back to the first point we raised at the beginning of this show around the importance of clarity and communication. Now, that brings me to another thing around the revenue earners of a business or a company that is listed on the stock exchange are the ones that will make me get attracted to it. So if Simera, for argument's sake, is listed and they have 10 companies competing against them, I may not put my money there. If Braira has a monopoly, I'm more likely to do that. If MTN has the biggest mobile money platform in the country, I'm going to throw my millions or hundreds of thousands behind them. If MTN has invested money in 5G network across many other countries where they operate, with the exception of Rwanda, I will think twice about that. So I think there's a conversation that needs to be had that the moment you become a public company, when you get to the negotiating table, and this is really to Mitwa and her board, that you need to have a different conversation around some of the unfair competitive landscapes that we have in our market. That why should it be that the 4G rollout is restricted to certain people who are not public, and I am public. If I want to attract more people to subscribe onto my shares, I need to push Rwanda Stock Exchange to say, no. These unfair business practices that are happening that may be a hindrance to people subscribing to my shares, they have to be...
Can you just shed a bit more light for what you mean about unfair?
No, of course, Mito understands where I'm coming from and a few of
yeah, but for purposes of our viewers, unfair practices... but just let me clarify my question, Charles.
Yes.
Unfair practices for potential shareholders?
No. So let's look at the 4G network space. Who are the players in there? Some people have come into the space, invested a lot of money into the space, and they were given monopoly over a certain period of time.
Yeah, that's the company that has the rights to 4G Rwanda.
Yes. And when I know, Diana, you might be a bit hesitant to drop names because they...
No, I'm not. Actually, you are. I don't want you to be as frank as possible. This is a very frank show.
No, you don't want to give people unsolicited mileage.
Okay,
yes.
carry on.
Yes. So such unfair business practices, which may be a hindrance towards the growth of our stock exchange have to be addressed. So the incentives that Bana was referring to are two-way. There are incentives to the person who is listing, but also incentives
for other companies
to get attracted to get into that space.
The stock exchange.
Yes.
I hear you in as much as you've been kind of beating around the bush, but I would like to hear from Celesta and Mitwa. Celesta, just before we go to the last part of the conversation, which is really to do with investor readiness, we actually had a conversation here with the Auditor General last week, and corporate governance, good corporate governance practices is something that we were really focused on. It's a big need with all the companies, especially in the private sector, as well as those in government. So if you could just touch on, before we get to that part, the investor clinic. Celeste, I'd like to hear your thoughts on what Bernard, Charles, and Mitwa have just said before we head on to this third segment of the topic tonight.
Well, what I could say is that what they're saying is right. If a company is competing very well in the space they are operating in, it's good for the shareholders. But at the same time, you don't ignore the other practices. The economy can't just put incentives only for listings. It has to look at the entire practice in the industries. So where there is malpractice, of course, it has to be fought. But if you go into the what Charles was mentioning just now about the 4G situation, of course, it's unfair sometimes if you have monopolistic practices anywhere. I think that's something that can be looked at. But again, that comes back down to the industry itself, regulators. And I wanted to also say something about the entire value chain. I think Mito was mentioning it just now. If you look at the pricing, you look at the business case, you look at money making, sustainability of businesses, you have to look at the entire supply chain. The value chain, actually, from the service providers, the regulators, and even the customer, the end customer. So, and you have to be looked at in this way. If you have, I think this particular issue must be looked at from the trade associations, for example. If you are playing in the field of telecommunication, there are not many. And people are dealing with that. There's only one regulator nowadays, actually, because there are banks also. There's also a second one, which is the central bank. And you sit down and sit with the government and look at now public companies. If they are public companies, there are more stakeholders into those companies. And if we want to develop the culture of savings, we must make sure that the savings do not go to waste or do not go to competition, which is not fair. So I think that's what I could say on that. Competition and regulation, and the entire holistic approach to what these companies are doing.
Thank you. Just in the interest of time, I'd like to just quickly hear from Mitwa if she has something to say. We'll come back to you, Charles. Yeah. Over to you, Mitwa.
No, I think it's a discussion that could have a whole show dedicated to it in itself, right? And it's great Bena raised, and maybe we should further the conversation in subsequent discussion But the two things that Celestin raised. One, obviously, that businesses such as ourselves, of course, we exist, to create a profit for our shareholders. But more importantly, we don't exist in isolation of our customers, right? So the whole pursuit around delivery of customer value is something that shouldn't be doubted at any given point in time. And when you look at the growth, for instance, on mobile money, we are where we are today because of the investments that we've made, of course, with the huge support coming from the central bank and other government agencies. And a lot of the affordability discussions, even though it's very topical now, when you look at the history of the pricing of the mobile money ecosystem, it's come down quite considerably to reflect also those volumes. But of course, it's an ongoing discussion that I think would be furthered beyond today, together with the stakeholders that we have.
Thank you very much, Mito. Charles, very quickly.
Yeah, I just wanted to emphasize something that, at the risk of, because you alluded that I was sounding dodgy.
Beating around the bush, which is so unlike you, Charles.
Yeah. No, I think it's because Bana sort of threw a spanner in the works and said because we're on RBA, we need to be a bit cagey. But that's not what I intended. I think by virtue of the fact that MTN has gone public, therefore, anyone who is interested in taking a piece of the MTN pie wants the pie to be very big. And it's up to MTN management and their shareholders to fatten that pie. Internet is a huge income earner. MTN mobile money has quantity, but in my opinion, internet has quality. Go to RDB, and this is my cry out, to say whoever crafted the investment agreement around whether it's the likes of Liquid or the likes of KTRN or the likes of whoever is a bottleneck towards MTN rolling out 4G. And let them go to them and say, no. You put a stumbling block on 4G, but we are at 5G. We want even to prove to you that we are sampling 5G in South Africa, in Gabon, in Uganda, in all these other markets, with the exception of Rwanda,
because
that Mito has rightfully said it was their first territory in the region
after South Africa.
Out of South Africa. So we should not be.
Yeah.
We should not be the last to get the 5G
because of those frameworks.
Yes. No, especially because we are investing in the company.
I'd like to hear from Bernard. Bernard, we really don't have time, but yeah.
I just feel like MTN is getting a lot of mileage from this show. The show is about the stock markets, not MTN. So let's go away from telecom. I just wanted to remind us that the growth of the capital markets is so important because eventually what you want to achieve is that it must reflect the economy. So it's good that we have the financial sector, we have telecom. Now, ideally what we need is a different company from a different sector. So that perhaps in 10 years, when you look at the stock exchange, we can easily tell the composition, of the Rwandan economy. That's number one. Number two, if it was up to me, again, I know that for Celeste and the team, you want to have as many products as you can on the stock exchange. But for me, two would be key. One, encourage more IPOs, and two, bonds. By, for instance, the City Council. For a very long time, Kigali City Council had this idea of a municipal bond. Up to today, it hasn't happened. I don't know why. Perhaps Celeste can speak to that. Secondly, we talked about a diaspora bond. 10 years down the road, there's no diaspora bond. What happened? We know the diaspora is going strong, at least by the campaigns on social media. Why don't we have a diaspora bond on the stock exchange.
Stock exchange.
We even spoke about an infrastructure bond and nothing has come of it, yes.
That's true. Celesta, over to you. But if you could, before answering Brenda's question, just give us a brief overview of the Investor Clinic, what it does, and you know, the prospects that you think it has for enabling SMEs, because we also have to look at SMEs. Majority of, you know, companies in this economy are made of over 90% SMEs. If you could just talk very briefly on the Investor Clinic that your company, together with the Ministry, I think, of Finance and Economic Planning, as well as the Capital Market Authority, put in place to enable SMEs to join the Rwanda Stock Exchange. Over to you.
I think the investment clinic actually would answer part of the first part of the Bernard's question on our product line, or pipeline rather, or in diversification into our market. So if you know the mix of our companies, actually the whole economy, more than 90% is comprised of SMEs. They are the biggest employers. They have the biggest potential for growth, but we have not been addressing them. Of course, because of the obvious, when you are developing a market like this, which requires a lot of things to do on the part of companies, you have to start with the bigger ones, which are more credible, so that you can build the confidence around the whole industry. So now, since the soft infrastructure has been put in place over the years, hard infrastructure, that is technology and so on, has been put in place. Now we had to look at the bigger parts of our business community and entrepreneurs, startups and SMEs and other corporates. Actually, you know, the investment clinic is mainly focusing on the SMEs, but also other corporates, they are also being looked at. So it has been created basically as a platform to hold their hand so that they can be investor ready. So we look at the whole issue, all the issues of corporate governance, accountability, and readiness for them to be attracting investment, either for people who want to buy shares into those companies or people who want to support them one way or another. All investors, you remember, they are always looking for a return on investment. But they are also aware there are risks associated with that. But one risk people are not willing to take is your own risk as a business owner. So that the issues of mismanagement, issues of sustainability around those businesses. So the clinic was created to diagnose those companies, hold their hand, and make them investor ready. So they would be having good corporate governance in place. They will be having good accounts in place. They access all those services through our ecosystem as a market. Of course, you mentioned it. We work with the Capital Market Authority, Ministry of Finance, RDB, PSF, Minicom, and other stakeholders to make sure that we hold these companies' hands to get them to be investor ready. At that stage, when you have a company with a sustainable business plan, a sustainable way of doing business, we make sure that you will access also finance in the future for that. So this one is geared to getting them ready to access finance.
Thank you very much, Celesta. Just very quickly, Charles Brenner, we have a question from our social media. We have to hear from our viewers. Yes, he's going to get to that. We have a tweet coming in from Alphonse. Just very quickly, and this is addressed to you, which is interesting because you know, it shows these are opportunities to clarify some of these things for the general public. And this tweet says, thank you for a good show, but could Celesta explain to us how to predict future stock markets are planned for better believing that is different from pyramid schemes that our Rwanda Investigative Bureau is against? So I don't know if you understand his question, Celesta.
Well, I will attempt to answer that. I did not get that properly. I think it has to do with pyramid schemes versus going to the stock market. Exactly. I wanted to remind the listeners and the viewers of this show that the stock market is not about speculation. And I think it's Brenda who mentioned it. It's all about also a reflection of what is happening in the country and the economy in general. So it's a mirror of what happens in the economy. If you know, for example, in our economy, the Rwandan culture is not a speculative culture in general. So if you have speculation across the border, because there is COVID or the borders are closed, you have not seen the rice increasing that way, the way it happens in other places. You go to a pump, for gas across the borders, north of Uganda, in Uganda, for example. They can increase prices, or Congo, anywhere in those countries, anyhow they want. But here, things are regulated. They regulate themselves sometimes. So that it goes in our nature for people not to speculate, and our market reflects the same. So you don't see share prices going up 100 times in 1 year because there is nothing to back that for those fundamentals. So if you buy shares in the stock market, if you buy a bond, you know the government, after every 6 months, for example, they will be giving you a coupon, they will be giving you interest. If you buy shares of MTN or any other companies which are listed on the market, they are listed and they are credible enough, they make money, you make sure, actually, when they distribute a dividend, you will get it. So there is no speculation really in the capital markets. You are in it to for the long term, and it's credible enough. Companies have addresses, they have regulators, they have general assemblies, they have good board of directors and so on that goes with it. So speculation in that space is not that much. The same way you go to those, for those other products, you find most of them are illegal. There is no get-rich-quick scheme anywhere. If you want to be rich, you don't get rich overnight. Something must be wrong if you want to be rich overnight.
Thank you very much. We have come to the end of our show. Unfortunately, I would like us to just give an opportunity to our guests to give their closing remarks. I'll start with you, Mitwa, and in your closing remarks, Celesta, maybe you can just very quickly touch on Brenna's question about bonds, as something to focus on as well, municipal as well as what you talked about in terms of diaspora. But Mitwa, closing remarks, and then over to you, Celesta. Thank you.
No, huge thank you for the invite, Dan. I really enjoyed the conversation, and I think it was an interesting piece talking about transaction fees and pricing in the context of being listed on a stock exchange, right? Because there has to be that constant balance, especially when you're listed, between affordability and sustainability. But it's something that we continue to pursue in terms of trying to increase the participation in the financially included environment. So looking forward to furthering that conversation, not only here on the show, but also beyond and with stakeholders as well.
Thank you very much, Mitwa. Celesta, over to you. Closing remarks.
Thank you. I just wanted to say, I want to answer what Bena was asking about, talking about. Development takes a long time. So the market has started with some bonds coming to the market. Then we had some equities from cross listings. Eventually we had companies coming to the market. But there are a few projects and products in the pipeline. You mentioned the issue of municipal bonds. It takes time to prepare also. So it's not just about coming up with a product. The product must be suitable. The cities must be ready, the municipalities. But I must say that this question is back on the table. Soon enough, you will hear about it. I think the city of Kigali is considering issuing a municipal bond. There is also some different kind of products that come to the market, like infrastructure bonds and so on. But those ones require a promoter. So the promoter is not the stock exchange. You have to know that these things are driven by demand. For us, our job mainly is to put in place the right framework, the platform, and a conducive environment, which we believe is there right now. So any product that has come to the market has been oversubscribed over time. We have a lot of activities in the market. Our market cap today is about $3.9 billion. And if you add the debt instruments which are listed also on the market, it makes it up to 47% of GDP. That's not small value of listed securities on our market. So it will take time to develop those. The diaspora people who want to get based in Rwanda, they are welcome. And all Rwandese, this market is here for us. It's ours, and it can make it. We have all the money we need to make it in this economy of ours, matching the demand and the supply.
Thank you very much, Celesta. Sorry to cut you short. We have come to the end of our show.
I can't say one sentence.
No, Charles, unfortunately not. I would love to, but the beauty about this show is that we carry it on social media. I know there are a couple of tweets that are coming in. We'll definitely keep the conversation going with MTN Rwanda and, of course, RCE, Rwanda Stock Exchange, and even CIMAC, if possible. So I'd like to thank our guests, Celesta and Mitwa. Very, very, very happy to have had you on here. I hope a lot of issues have been clarified for our viewers. Thank you very much, Mitwa and Celesta. To our viewers, thank you for tuning in. Keep the convo going on our social media feed. Charles, thank you very much. I'm really sorry, but we'll carry on with your comments next week. Bernard, likewise. Always a pleasure to have you guys debating, disagreeing, and agreeing. I'd like to also thank our partners, Uzi Collections and Bourbon Coffee, for just keeping it made in Rwanda and supporting the Square. Thank you very much. Have a good night. See you again next week.